Hi, I'm Sandy Ingram, aka C. Ingram, a registered tax professional with the IRS since 1999. Welcome to the channel, The Education Matrix. Now, when I retired, I lived in the San Francisco Bay Area. And living in the Bay Area is so very, very expensive. So I decided long ago that I would retire to Mexico and then travel the world. I first arrived in Puerto Vallarta, beautiful little town, beautiful. And then I moved to a smaller fishing village, Mismaloya, Mexico. I got a small studio overlooking the sea, and I stayed there for 5 years. I then decided that it was time to travel and see more of the world. I spent some time in Cabo, and Cabo is beautiful. A lot of Americans and Canadians in Cabo. But the thing is, Cabo is a little expensive, and it reminded me of Southern California. I then traveled to Mexico City. And Mexico City is a beautiful city, but it is wall-to-wall people. Plus, there's a little bit of a smog problems on some days. Now, I am in Acapulco. Acapulco is beautiful. Yes, it is a little dangerous. However, you get to know where you can go safely and where you shouldn't go and where you can go, what you can do and what you can't do. And yes, it's a little intimidating, but it's all so much fun here in Acapulco. Plus, the cost of living is really cheap. And believe it or not, there are lots of expats here in Acapulco, both Americans and Canadians and Europeans. Now, in this video today, we're going to talk about how the IRS catches tax cheaters, how tax cheaters get caught. Are you ready? Stay tuned.
Business individuals get into trouble and get audited is because they are a part of what the IRS calls related examinations. They may select your return when you are involved in a transaction with other taxpayers, such as business partners or investors whose returns were selected for audits. So you can be audited because of association. Now, this is how the IRS catches cheaters. You only have to look at the FBO.gov site to note that the IRS and other government agencies are always employing or looking for sophisticated, high-tech programmers for software. And therefore, they pay top dollars, they get the best. They get the best in the United States, in the country. What happens is the IRS compares is not the correct word. The correct word is the IRS matches employer information, bank information, your mortgage company information, 1099 miscellaneous, 1099 dividends, 1099 interest. Even if it was 30 or 60 cents, it equates out to $1 because you round it up or you round it down. Credit card information, transactions over $10,000 or more, or transactions that are that they feel should be scrutinized. Gambling, if you win, usually the casino will give you a 1099 and they send that information to the IRS. People you work for, if they turn the information, if they turn the information over to the IRS, this information is also matched. And freelance gigs, your banking information. This is all matched with the information on your tax return. Therefore, if the IRS computer finds a 1099 dividend for, say, $200, but they don't find dividend income on your tax return, guess what happens? That's right. You receive a letter in the mail. More than likely, it will be a CP 2000. And what this is, the IRS says it's not an audit, but what this is the beginning. They want to know why the $200 1099 dividend was not on your tax return. Well, if you did your own tax return, you may have put the 1099 dividend, $200, under the 1099 interest. Well, you could explain that to the IRS and that you made a mistake. But most tax professionals will recommend to you that you contact a tax professional before you respond to the IRS to be 110% sure of what the IRS is asking you. This is how taxpayers get caught.